Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video we will be looking at AMD. AMD has been one of the worst performing companies in last year, especially the semiconductor companies, and this year is exactly doing the same thing again. Is down quite a lot. I do own the company in my family portfolio. There are so many companies that have not been doing well at all, and as you know, the S&P 500 is taking a massive hit on daily basis, and this is just becoming a normal right now. So this is going to be our new norm, but it doesn't really matter to me. Like I've said to you guys, and I've been asking so many questions over the last 48 hours. People are asking me whether I'm buying more or selling. I'm not selling anything. I'm buying more as much as I can. I'm not gonna time the market. I can't time the market. I'm just gonna buy high quality companies and hold them in my portfolio and just leave them alone. And if you are selling right now because you're scared of what's happening in the stock market, then I promise you the stock market is not a place where you want to be. If you are buying right now and you're actually doing a lot more research right now, and I mean it, a lot more research right now, and looking for high quality companies that are, if you are a dividend investor, growth investor, whatever you want to call it, you're looking for high quality companies, you've got your matrix sorted, you're looking for growth in terms of revenue, you're looking for and EPS growth, you're looking for free cash flows, you're looking for dividend growth, you're looking for earnings growth, whatever it is that you're looking for, you've got your list of things that you're looking for, and you're looking every single day new companies potentially to add to your portfolios. That's what I'm doing. Okay, and if you're doing that, that's absolutely amazing. If you're not doing that, then you're doing something wrong and you should not be in the stock market. So we're going to talk about AMD in this video. I'm going to explain basically what the company does. We're going to talk about the latest earnings report and just show you some of the highlights from that, and see if the company is actually overvalued, undervalued. We'll give you some of the matrix and so on. So we're going to do as much detailed basically on this video as much as we can, inshallah. If you like this type of content, join us at the Patreon account where you get access to a lot of things. Okay, and right now you get 50% off, depending on which which tier you actually join in. So, and also like the videos, please. Now, like I said to you guys, there's so many people selling right now in their stocks because they're worried about what might happen with the tariffs, with everything else. And this is quite normal. I've seen this happen before. And the people that benefit from this are people who are genuinely long-term investors. They're looking around and buying high quality businesses, and just leave them alone. Okay, and that's probably what you should be doing right now, because when you see the S&P 500 down, I don't know, since a year to date about 3%, that's not a lot. Remember, this S&P 500 thing was actually up over 20 something percent in 2024 and 2025 3 as well. So the fact that it's down about 3%, you shouldn't be worried about that. You should use that to your advantage. And genuinely, if you're not, then you're doing something wrong. And I promise you, the S&P basically investing in the stock market might not be the right thing for you. You need to have a long-term mentality. You need to buy stocks when they're cheap, not when they're overvalued. I promise you, I've got friends who talk about the stock market every time it hits all-time high, and that's the time they actually buy whatever. But also when it's down, like, no, I'm not touching it. This is not maybe at the bottom. It might go even lower. So what? If it goes lower, buy more if you actually genuinely believe in the company. Because remember, the S&P 500, there's so many companies here, right? Some of these companies are down because of their financials might not be great. But some of these companies are down because the entire market is down. Like I said in the last video, when the indexes, an ETF is consistent, every single company is in here. So when people sell an ETF or index fund, of course they're selling portion of basically service now, portion of CRM and so on. So for that reason, the companies will go down a little bit. Now it will be very interesting. By the way, Broadcom is reporting tonight after close. It will be very interesting to see what they say, and I would be very surprised if this company goes up tomorrow. Probably will be down 10+%, because the market is not forgiving right now. Even if they come out and it's the lightest basically miss or anything, I'm 100% sure this will go down at least 10-20%. But again, it's one of my biggest holdings. I'm up 280%. I don't really care whether it goes down 10%, 15%, 20%, because I'm a long-term investor and I'm going to hold on to my shares, and that's exactly what I would be doing. So if you are new to the market, don't worry too much about it. Now, the company we're going to talk about today is AMD. AMD has a different segment when it comes to their business. They're a semiconductor company. They basically work in the especially majority of their revenue comes from the data centers. They work in basically the client side of things, the game side of things, the embedded systems. So they have all these, GPUs, CPUs, and so on. They've been around for quite some time. They're not a brand new company. And as you can see, in year to date, they actually down about 18%, which is a lot. You've seen the S&P 500 is down about, what, 3%? This is down about 18%. But for the 1 year, it's where basically things are a bit crazy. 51%. We are now touching the 52-week low for this company. The highest it's been is 227. If anyone has bought this company when it was $227 per share, right now they're panicking. And this is why basically, you have to be careful when you buy any stocks when they're overvalued. Maybe it was overvalued at that point, but let's look at today and see if this company is actually undervalued. The first thing I'm going to do is to just spend a little bit of time looking at the financials. Okay, and as you can see here, from almost $4 billion to right now $25.7 billion, and in terms of revenue side of things. The cost of that revenue for this year is about $12 billion. Gross profit about $13 billion. So they do have spend a lot of basically money on basically when it comes to research and development. As you can see, $2.7 billion of that goes back to selling and general administration. Then you got research and development, about $6.5 almost $1 billion. Overall, they're spending a lot of money on that side of things, which is absolutely fine. That's what you expect. So the net income right now is $1.6 billion. And then the other thing I want to look at is the EPS. So it had a negative EPS for quite some time, but it's gone up basically over the last couple of years. Now, the other thing I want to show you is the financials. So again, sometimes you have to be careful with certain companies because they might have so much liabilities, and they might not have enough assets and so on. So it's very important to know that, because you should not be investing in companies that have more liabilities than assets. So total current assets, in fact, let's just look at total assets, it's almost $70 billion, right? Total liabilities, on the other hand, is about $11.6 billion. So they have more assets than actually liabilities, which is what you need. Okay, this is exactly what we're looking for this type of business. Now, they reported earnings recently, and just to kind of give you a management view of basically what they've said, basically on what the company is expecting in 2025. So they launched MI350, which is basically their newest chip, if you like. So Lisa Su is basically the chairman of the business, or the CEO, if you like, and basically she talked about basically highlighted AMD's transformative year, emphasizing record annual revenue of $25.8 billion, and that's 14% increase year over year, which is quite good. And a lot of that came from the data center and client segment. The data center segment accounted for 50% of the annual basic revenue, with 69% year-over-year growth in revenue for Q4, and basically reaching almost $4 billion, which is absolutely amazing. They've announced that the MI350 series production will be pulled forward because of a strong demand, which is really something good. Sometimes companies come out and say, okay, we can't, there's a massive demand, but we cannot meet the demand, and so on. So they're saying we're not going to do that. We're going to pull it forward, and we actually will potentially meet that, which will be absolutely amazing. And a lot of these basically chips are used for AI and so on. She also talked about basically record desktop channel sellout. And this is their sort of a flagship, if you like, the CN GPUs, and then desktop processors and robust performance in the client segment, which reached about $2.3 billion in revenue, and that's about 58% year-over-year increase, which is again another amazing thing to, if you think about it. Again, gross margin of 54%, operating income of $2 billion, and EPS basically was about $1.09. That's 42% year-over-year increase again. So you're looking at all of these things. Okay, that has been absolutely amazing. So was there any issue with the outlook for the company for Q1 for 2025? So they're saying approximately they're going to make about $7.1 billion, slightly down sequentially, basically, but up basically 30% year over year, which is absolutely amazing if you really think about it. And that was driven by strong growth in the data center, which is something that we've already seen. And gross margins are forecasted to remain 54%. So again, I don't understand where the issue is coming from, because based on that, that's absolutely fine. They also basically anticipate double-digit revenue and EPS growth for 2025, so the whole year, driven by continued momentum in the data center, GPUs, and CPU businesses. So Sue has highlighted opportunities in increased deployment in AI workloads and the launch of new products like the MI350 series. So again, nothing really to worry about. The management reiterates the confidence in capturing large portion of the basically AI acceleration market, projecting a segment of growth to tens of billions in annual revenue in the coming years. Again, they can over exaggerate a little bit, but then again, I don't see anything that that worries me at all. Now, the financial results, I will pause, but you can have a look at it. But there is nothing that worried me in this section, so you can pause the video and have a look at that for yourself. And then there was a lot of questions and answers basically and asked by the analyst that were watching this whole thing. And then at the end, it kind of summarize everything. It says here AMD delivered record Q4 and full year 2024 results driven by strong performance in the data center and client segment. The company is positioned for double-digit growth in 2025, supported by a robust product roadmap that includes the MI350 series launched by mid-year. So around this, basically mid-year this year, that's when they're going to launch it. While challenges in competitive pricing and the embedded market remain, AMD is confident in capturing large share of the AI acceleration market and underscores its growth potential. Now, the only other thing I will say is the uncertainty with China and the fact that these companies have been told not to sell, some of their latest products to Chinese companies. That can be a problem. The tariff situation can be a problem, and there are other things that could potentially hit the company, but that is external factors. Big company is still making profit, they're still doing really well, but potentially with the China situation, that could be a huge problem, because I'm not sure how much of maybe I should find out more, and I'm not sure how much of their revenue actually comes from China side of things. So overall, I don't see any problem with this. So what we now need to do is look at the financials and see if this company is actually doing well overall. So based on what we've just seen, I can't see any huge problems. But as you can see here, this is a huge company, 161 billion market cap. It has a narrow moat. Current P is quite high. The forward P is only 21, and the 5-year average is only 51. So forward P 21. Average base of the last 5 years, we're looking at about 51. So that's quite high in comparison to sector median. Now, free cash flow, we've got over $2 billion. The free cash flow compounded annual growth rate for the last 5 years is 54%, which is absolutely amazing. Profit margin, return on equity, and the operating margins and things like that are okay. They're not the best, but it's still growing. There's a growing company. Return on invested capital about 3%. Net income margin for the last 5 years, we're looking at about 11%. Revenue compound annual growth rate of 34%. EPS is about 15%. Current ratio, we've already seen the company has more assets than liabilities, so that's over 2, which is good. Normally we're looking for over 1. And they're expecting the earnings to grow about 43% next year. Revenue basically to grow about 23%. Now, if we go back here, I'm going to show you this. Okay, if we go back to the earnings expectation, what you will see is this. When it comes to EPS growth side of things, 42%, 34%, let's call it even 35%, okay, 20%, 30%. Even if you just focus on the first 3, there's 44 analysts, 42, and then basically 11 analysts looking at for the next 3 years, which is really decent amount of numbers, okay, so that's probably one of the highest you will find. Same goes for revenue, 23%, 21%, 15%. So in terms of growth side of it, it's not any issue. We know that the company is doing well, okay. So Morningstar is saying right now $140 basically dollars per share is where they think the price should be. It's 4 stars right now, so that's really cheap. Okay, and according to Simply Wall Street, they're actually saying it's 50% undervalued. They think the price should be about just over $200 per share. According to Refinitiv Ratings, okay, they think the price should be 148, and that is about 45% upside from where we are, and they're actually saying it's a buy. Now, Tip Rank is actually saying 147, 47% upside is a moderate buy. Seeking Alpha 148, almost a 50% upside from where we are, and basically saying it's a buy as well. So they all kind of agree basically the fact that the company is still undervalued and it's a buy right now, whether it's a moderate buy or buy, whatever. Now from Sharia compliance side of things, is absolutely nothing to worry about. And this company is basically well known for kind of diluting their shares over the last whatever years, and that's quite common for high growth companies, because they basically dilute the shares and selling those shares and using that money to reinvest in the business, which I actually don't mind at all, as long as the company basically is not buying shares when the shares are very expensive. So right now I probably would love the company to buy more of their shares. Before we look at the valuations and basically where I think the company should be, we just need to look at very quickly in terms of the where the company has been, the total return basically for this company for the last whatever years. For the last 3 years, the company has actually got negative 2% return. The S&P 500 is about 40% last 3 years. Qualcomm is about 12%, which is a competitor. Okay, the Texas Instruments about 28%. Broadcom, we know, has done absolutely amazing job for the last few years, so 246, and we got Nvidia, which is about 400 plus. Okay, last 5 years, about just over 100%. It has outperformed the S&P 500 if that's your benchmark, and the rest of the companies more or less the same, these two. But these two, of course, have done absolutely amazing because of the AI madness over the last whatever months. Now, over the last 10 years, is up 3,500. So if you bought this basically of 10 years ago, and you basically still holding on to it, even in 2020 when the company was about $40 per share, that's when when I bought it, it was slightly lower than 40 something, and then I sold it around 40 something because I didn't think it was too expensive at the time, and then basically kept going up. So if you hold this company for the last 10 years, you will be up over 3,500 right now. And when you look at that in comparison to the S&P 500, 181%. Qualcomm has done a decent 200%. Texas Instruments 335%. Basically, when it comes to Broadcom, is actually just closer to 2,000. So it's actually outperformed Broadcom. Broadcom has done crazy over the last 2 years, but before that, it was kind of very stable company. But look at Nvidia, 20,000%, 20.5%, basically 1,000% over the last basically 10 years. And finally, we're going to put all of that together. So Morningstar valuation, simply Wall Street, seeking alpha, multiple valuations that are used, a discounted cash flow model that are used. All of that put together, the average intrinsic value for this company is 145%. Right now it's $99 per share. The difference is about 47%. Now, if you say this is a very volatile company, I need about 30%, you can still buy this stock until it hits 102. So that's your price target. So it's still undervalued in my opinion. I do own it in the family portfolio. I have added to it. Inshallah, I'm going to share that with the community. Normally when I basically make any sales or buys on the family portfolio, I do share it in the Patreon account. So if you're interested to see the entire portfolio or family portfolio, then you can actually go and check that out. But as you can see here, this is a great company. Based on everything that I've shown you today, I still believe in the company, and I will be adding to it inshallah in the basically near future, but I'm only going to keep it in the family portfolio. So yeah, it is becoming a mature company, is heading the right direction, very much undervalued. This is the type of business that you just want to buy right now and ignore the noise and carry on holding on to it very long time. The final thing I want to say about this company is very, very volatile. It goes up 5% on this way, 6% the other way. So you have to be careful with that. So right now it's done basically about 2%. Tomorrow you might be up 5%, and the next day might be down for 10%. So if you basically can stomach that sort of a volatile, basically, then you will be okay. But overall, it's a great company. I'm going to hold on to it, inshallah. And like I said, all the other companies that are in my portfolio that have done well over the last whatever years, I'm not selling anything. Inshallah, I will be buying more. I do have quite a bit of cash here. I will be adding more tomorrow. I will share with you guys exactly what I'm buying, hopefully by the end of this week. So yeah, that's all I wanted to share with you guys. I hope you're enjoying this content. If you are, it takes a lot of time and effort to put these videos together. I would genuinely appreciate it if you can like the video, subscribe to the channel, join us in the Patreon account. Tell me what you're buying, what you're selling. Let me know if you own Nvidia. If you have any companies that you would like me to look at as well in the next few weeks, I've got loads of more companies planned, videos planned for us, inshallah. As you can see here, there's another 5 videos that I've got planned. So I will be sharing that with you guys, inshallah. Have a wonderful day. Assalamu Alaikum.